Hi, this is Juliet Orfiano. Welcome to my video. If you are first time on my channel, please like, share, and subscribe so I can notify you when I have a new video. In this video, I'm going to discuss about operations, dividends, book value per share, and earnings per share. The topics that I am going to discuss are as follows: accounting cycle of a corporation, preparation of a worksheet, preparation of financial statement, statement of financial position or balance sheet, statement of recognized income and expenses, statement of changes in shareholders' equity. Accounting cycle of a corporation. The accounting cycle of a corporation is essentially the same as that of a sole proprietorship and a partnership. Transactions such as purchase and sale of merchandise and payment of expenses and liabilities are recorded in the same manner as that of the two other forms of business organizations. At the end of the accounting period, the results of operations of the corporation and its financial position are determined, and the following problems are normally encountered. First, preparation of worksheet. Second, preparation of financial statement. A. Statement of financial position or balance sheet. Letter B. Statement of recognized income and expenses or income statement. Letter C. Statement of changes in shareholders' equity. Letter D. Statement of cash flows. Number 3. Preparation of adjusting and closing entries. Preparation of worksheet. A worksheet is a paper that facilitates the preparation of financial statements. However, before it can be prepared and completed, data for adjustments must first be compiled. These items requiring adjustments are also the same items discussed again in this chapter 1 and 3. For purposes of illustrations, these will be discussed again in this chapter. Data requiring adjustments at the end of the accounting period include: first, accrued expenses; second, accrued revenue; third, prepaid expense; fourth, unearned or deferred revenue; fifth, uncollectible accounts; sixth, depreciation and other cost allocation; 7. Income tax. The worksheets normally contains 8 columns. However, there are instances when 10 columns are used because of addition of a pair of columns for retained earnings. Preparation of financial statement. Financial statements are the end product of the accounting process. The information contained therein is taken from the completed worksheet. Generally, there are 4 statements prepared, namely, the statement of financial position or the balance sheet, the statement of recognized income and expenses or income statement, the statement of changes in shareholders' equity, and the statement of cash flows. In addition to the basic financial statements I've mentioned, the Securities and Exchange Commission or SEC requires that the corporation submits to the Commission within 15 days from the end of the first 3 months of operations a statement of cash flows covering a period of 3 months from the date of registration. The statement must show in sufficient detail the sources of cash and how these are disbursed. The paid-up capital must be disbursed only in connection with the business for which the corporation was organized, and no amount shall be disbursed as loans or advances to shareholders or officers of the corporation. The preparation of statement of cash flows will be taken up and discussed in higher accounting subjects. Statement of financial position or balance sheet. The statement of financial position or balance sheet reports the financial condition of a company as of a particular date. It contains the assets, liabilities, and equity of the business. The assets and liabilities should be properly classified as current or non-current. The equity section of the Statement of Financial Position of a corporation is called Shareholders Equity or Stockholders Equity and is generally composed of contributed capital and retained earnings. In some instances, a corporation may have capital maintenance adjustment accounts such as revaluation surplus and net unrealized gain or loss on long-term investments that are shown separately in the equity section. Contributed capital. The contributed capital represents corporate capital arising from investment by shareholders. It is further divided into two sections. First, share capital or capital stock. This is also known as legal capital. This section reports both preference, preferred and ordinary, common share capital issued, subscribed and distributable as dividends, stated at par or stated value. In case of share capital without par value nor stated value, the amount reported is the total value of consideration received in exchange for the shares. This section should include a description of each class of share capital, such as the par or stated value, authorized shares, number of shares issued, and dividend rights in case of preference capital. Share capital subscription receivables that are not currently collectible are shown as deduction from share capital subscribed. If the journal entry method of recording share capital transaction is used, issued share capital is determined by deducting the balance of an issued share capital account from the balance of authorized share capital account. Number 2, additional paid-in capital. This section reports investment by shareholders in excess of the par or stated value of the share capital. It includes paid-in capital in excess of par value or stated value, which is the share premium of both preference and ordinary share capital. It also includes donated capital and other paid-in capital items arising from various share capital transactions. Retained earnings, earned surplus. The retained earnings balance represents undistributed earnings of the corporation. It represents capital of the corporation arising from its operations. The balance of the account is generally divided into two parts as follows. First, appropriated retained earnings. Appropriated retained earnings, it is the portion of the retained earnings set aside for a particular purpose. Second, unappropriated retained earnings. Unappropriated retained earnings, it is the portion of the retained earnings available for distribution as dividends to shareholders. The retained earnings account has a normal credit balance. A debit balance in the account is called a deficit. Statement of recognized income and expenses or income statement. The statement of recognized income and expenses or income statement shows the result of operations. It reports revenue and gains over expenses and losses is profit. The excess of expenses and losses over revenue and gains is loss. An essential part of the income statement prepared for a corporation is the earnings per share amount that is reported below the profit figure. The concepts and principles relating to earning per share calculations as provided in past 33 shall be discussed in this chapter. Statement of changes in shareholders' equity. The statement of changes in shareholders' equity is one of the basic financial statements that should be prepared. This statement reports transactions or items that cause changes in shareholders' equity account balances. The statement shows the following: the profit or loss for period, capital share transactions with shareholders, and distribution to shareholders or dividend, the balance of retained earnings at the beginning and end of the period and the movement for the period, gains and losses that are reported directly in equity, preparation of adjusting and closing entries. After the financial statements are prepared, adjusting and closing entries must be journalized and posted. The adjusting entries of a corporation are similar to those of a sole proprietorship. No special problems are encountered in preparation of adjusting entries. Closing entries, on the other hand, consist of the following. First, closing the balances of revenue accounts to income summary. Second, closing the balance of expense accounts to income summary. Third, closing the balance of income summary to retained earnings. A. Profit. Income summary has a credit. Debit income summary and credit retained earning. Letter B. Loss. Income summary has a debit balance. Debit retained earnings, credit income summary. Illustrative problem A. The trial balance of the Bright Corporation as of December 31st, 2008 is presented a little bit later. The data requiring adjustments of December 31st, 2008 are as follows. Data requiring adjustments as of December 31st, 2008. A. Inventories. Merchandise for 750,000 pesos. Letter B. Supplies used. Office, 30,000 pesos. Store, 62,500 pesos. C. Unexpired insurance, 24,000 pesos. D. Accrued interest on notes receivable, 5,500 pesos. Letter E. Accrued sales salaries, 45,000 pesos. Office salaries, 25,000 pesos. Letter F. Estimated uncollectible accounts at the end of the year amounted to 168,000 pesos. Letter G. Depreciation on store and office equipment, 5% per year. Letter H. Income tax rate is 35%. The equity balances as of January 1st, 2008 are as follows. 10% preference share capital, 1,500,000 pesos. Ordinary share capital, 4 million pesos. Preference share premium, 350,000 pesos. Ordinary share premium, 525,000 pesos. Retained earnings, 787,500 pesos. On January 2, the following transactions have taken place. 5,000 preference shares were issued at 105 pesos. 75,000 ordinary shares were issued at 15 pesos. The trial balance of Bright Corporation as of December 31st, 2008 is as follows. Bright Corporation Statement of Recognized Income and Expenses for the year ended December 31st, 2008 is as follows. Bright Corporation Worksheet for the year ended December 31st, 2008 is as follows. Bright Corporation Statement of Financial Position as of December 31st, 2008 is as follows. Bright Corporation Statement of Changes in Shareholders Equity for the year ended December 31st, 2008 is as follows. Adjusting entries 2008 December 31st. Debit income summary for 450,000 pesos. Credit merchandise inventory for 450,000 pesos. Debit merchandise inventory for 750,000 pesos and credit income summary for 750,000 pesos. Debit office supplies expense for 30,000 pesos. Debit store supplies expense for 62,500 pesos and credit store and office supplies for 92,500 pesos. Debit insurance expense for 30,000 pesos and credit prepaid insurance for 30,000 pesos. Debit interest receivable for 5,500 pesos. Credit interest income for 5,500 pesos. Debit sales salaries for 45,000 pesos. Debit office salaries for 25,000 pesos. Credit salaries payable for 70,000 pesos. Debit uncollectible account expense for 138,000 pesos and credit allowance for uncollectible accounts for 138,000 pesos. Debit depreciation expense office equipment for 93,750 pesos. Debit depreciation expense store equipment for 142,500 pesos and credit accumulated depreciation office equipment for 93,750 pesos and credit accumulated depreciation store equipment for 142,500 pesos. Debit income tax expense 412,250 pesos times 35% is 144,288 pesos. Credit income tax payable for 144,288 pesos. Closing entries 2008 December 31st. Debit income summary for 7,173,038 pesos. Credit sales returns and allowances for 150,000 pesos. Credit purchases for 3,750,000 pesos. Credit sales salaries for 945,000 pesos. Credit delivery expense for 180,000 pesos. Credit miscellaneous selling expense for 105,000 pesos. Credit office salaries for 700,000 pesos. Credit rent expense for 375,000 pesos. Credit utilities expense for 247,500 pesos. Credit miscellaneous administrative expense for 79,500 pesos. Credit office supplies expense for 30,000 pesos. Credit store supplies expense for 62,500 pesos. Credit insurance expense for 30,000 pesos. Credit uncollectible accounts expense for 138,000 pesos. Credit depreciation expense Office equipment for 93,750 pesos. Credit depreciation expense, store equipment for 142,500 pesos. Credit income tax expense for 144,288 pesos. Debit sales for 7,050,000 pesos. Debit purchase returns and allowances for 75,000 pesos. Credit interest income for 16,000 pesos. Credit income summary for 7,141,000 pesos. Debit income summary for 267,962 pesos. Credit retained earnings for 267,962 pesos. Reversing entries 2009 January 1st. Debit interest revenue for 5,500 pesos. Credit interest receivable for 5,500 pesos. January 1st, debit salaries payable for 70,000 pesos. Credit sales salaries for 45,000 pesos. Credit office salaries for 25,000 pesos. Thank you for watching my video. I hope you like it and learned something from this video. I did part 2 and continuation of this video. I discussed in part 2 about dividends. Just click above or the link below this video to watch part 2. Don't forget to like, share, and subscribe on my channel so I can notify you when I have a new video. Once again, this is Juliet Orfiano. See you on my next video.